Not much is going on right now. We're still waiting for this government shutdown to end. There is going to be a deluge of economic reports coming out very soon. But looking at some of the off-the-run data, there certainly seems to be a larger economic slowdown at work over the course of October and moving into November. If using some of this other data, we could see a negative jobs print in the October employment report. We'll see. But it certainly suggests, between looking at layoffs and what's happening with some of the other employment data, certainly looks like there was a slowdown in job creation over the last month. Also, we're seeing a pretty big drop in rental prices, which will feed through to home prices as well. A little bit more than 40% of the inflation calculation is tied to rental income, so the homeowner's equivalent rent. And so that's a combination of both rental income as well as estimated what homeowners expect that they could rent their house for. That also suggests that that's going to be negative. So that could also lead to a lower inflation print when we see some of this data coming out. Again, we don't know yet. Again, once the government gets a hold of it, they start jiggering with the data, you get different numbers. But based on some of the off-the-run data, it certainly looks like there's a continued slowdown within the economy. Nothing major, nothing drastic, but does suggest we're going to see a lower than expected inflation print and a weaker than expected employment report. That will certainly put the Federal Reserve in the right position to cut rates in December. That should bode well for the markets because markets are expecting a rate cut in December. So again, kind of all these things are kind of just still working in that direction. Now, the big hope is, of course, is that next year we're going to have a big economic resurgence and that all this is going to come roaring back to life because of AI data center build-outs and the infrastructure required around that. There's a lot of hope for that next year. That $5 to $7 trillion worth of spending that's sitting out there will start to feed into the economy. We'll see. Lots of expectations. Valuations certainly have already well priced that in. So we'll see how markets react as we get to next year.
Catch me daily on The Real Investment Show. The link is in the description.